Welcome to the Opportunity Podcast, where entrepreneurs come to learn from real buyers, sellers, and industry experts on the lesser-known growth opportunities to build their online business empires. We'll uncover tactics veteran online business entrepreneurs have used to build, buy, flip, and sell their way towards personal wealth. Sit back, grab a coffee, and get ready to uncover hidden growth secrets. The Opportunity Podcast starts now.
Hey everyone, welcome back to the Opportunity Podcast, your go-to resource for hidden growth opportunities throughout online business. For those familiar or new to the podcast, I'm Sarah, and thanks for joining me today. In this episode, we're joined by Codie Sanchez, an investor, writer, and founder of Contrarian Thinking, an educational resource where investors and entrepreneurs can learn about unconventional ways to diversify income and achieve financial freedom. Today, Codie takes us through the first steps to gaining financial independence and discusses the advantages of diversifying income through business ownership. Codie elaborates on her contrarian approach to investing, how to break into various investment classes as a beginner, and some of the common mistakes people make when trying to achieve financial freedom. If you want to put yourself on the path to financial freedom, you don't want to miss Codie's insider secrets. I don't want to give away too much just yet, so let's dig into the interview. Hey everyone, welcome back to the Opportunity Podcast. I'm really excited to have today's guest on, Codie Sanchez. So Codie, how you doing and where are you calling in from in the world?
Doing great. Thanks for having me. I'm here in Austin, Texas.
Austin, awesome. Yeah, so you're like in the cool part of Texas, right? I think that's the reputation.
Yeah, I guess so. Definitely a lot of people moving here.
Yeah, I know that struggle. My hometown is becoming like it wants to be Austin, Richmond, Virginia. So who knows? We might be next. We were talking a little bit offline about your story and where to kick things off, but I thought that this would, be a good starting point. You describe yourself as a contrarian thinker and an unconventional investor. And I'm so curious, what does that mean?
Yeah. So when I think about investing, I think most people get it wrong. Either they think about when you say that you're an investor, you're this super rich person, you have all this money and that's what you do for a living. Or they think about it like these days, investing in crypto and Robinhood and sort of being maybe short-sighted and price speculative on assets. When I say a contrarian investor, what I'm saying is you're looking for the difference between the narrative, so what people say is happening in the world, and the numbers, what the numbers actually tell you about the world. And that's what I do. I try to look for the truth in the noise. And specifically, I'm trying to help people get to financial freedom from investing. And financial freedom, in my opinion, typically comes from moving towards cash flow day one and figuring out ways where every dollar that you make can go out into the world and bring back some friends along with it.
Oh, that's awesome. I was thinking about this before the podcast, and I'm glad you brought it up in this way, that it seems like the way that people think about investors or investing, it seems quite rigid. There's not a lot of fluidity with that and who is in the realm of investing. And I love that you're coming through and shaking things up and going, okay, no, there's a totally different way to do this. And it's actually accessible to everyone. That seems to be like a big part of almost your narrative in a way.
Yeah, that's exactly right. I don't think you have to be a rocket scientist to do this. And you guys know this. I mean, your whole business, I think, is revolved around helping normal next door businesses find their new owners. And, most of the businesses that you all sell and most of the businesses that I buy are not going to be the next Tesla, Uber, YouTube, whatever. They're the landscaping company that's at my house right now and that, I pay $150 a month and I don't think twice about it every single month. And neither do the other 10,000 people that pay them $150 a month. And those type of businesses are everywhere and they're the lifeblood of this country. I mean, 47% of all people with jobs get them from small businesses just like this. And so those are the type of investments I like to make. The boring businesses that are profitable, that cash flow, that have been around for years, if not decades, but that generation is looking to retire and our generation gets to pick up the mantle and run with it.
Absolutely. Yeah, no, I hear you on that because, in our realm, it's kind of the same thing. It's like the businesses that you are interacting with every day online that you're not even thinking that it's just very normal person, maybe your neighbor, is behind that business, that website, that review site that you just went, bought something on Amazon and they got a commission and, they're making loads of money from doing that. It's these things that people kind of don't realize can give them a path. And it is one of those things I wanted to ask you, because I know that you and I, we're probably advocates for business ownership as a means of building wealth, but plenty of haters out there, they bash it and they say, business ownership, that is way too risky. There's way safer ways to build wealth over time. So I was wondering, in light of that, why are you an advocate for business ownership to reach financial independence despite what the haters say?
Yeah, well, I mean, I was in finance. We talked about this in the beginning a little bit, but I was in finance for, decades. I was in investment banking. I was in asset management. I was, in investment sales. I did all of the things that people think you need to do in order to create real wealth. And that is understand the language of finance, the language of money. And I did that for years, and I made other people millions and millions, if not tens or hundreds of millions of dollars. But what I realized after a certain point is, wait a second. I can have money in the stock market, and that certainly works for me. And I can invest in mutual funds like that, and that certainly works for me. But if I want to actually replace my relatively large paycheck, I'm going to need to do something different, because I don't have at that point, tens of millions of dollars that can just make money for me to cover my every single expense. I didn't have enough money for it to bring back enough friends to cover all of my living expenses. And so I was like, where could I potentially do one or two things that would completely cover all of my living expenses and, maybe some extra? And I looked all around for different asset classes, and I really couldn't find anything that wasn't super speculative or didn't take 5, 7, or 10 years to bring back friends, like, VC. And so what I found was, wait a second, I've been in private equity. I'm literally buying businesses for other investors right now at a very large scale, $100 million transactions, multiple $100 million, billion-dollar transactions. Why can't I do that on a smaller scale? Why can't I go out right now and acquire these companies in this proven model that isn't complex? It's not easy, but it's simple, right? And why can't I replace my salary with buying a few companies? And if I buy companies that have been profitable for 3, 5, 10 years already, there's enough money in that company for me to hire an operator or just bring up an operator inside of the company that was in a manager role or something like that. I could theoretically treat a company like a bond, meaning that the company would pay me a percent each month, no matter what. And this person would run the company instead of me. And so I did that for a couple transactions, and it worked. And I thought, oh my gosh, more people should be thinking about this, because there's all this free money out there, like SBA loans. I know you guys talk about that, like seller financing, which 60% of all businesses are sold with some component of seller financing. And so I thought, man, I can take other people's money to give me financial freedom. And yes, there's risk, but what's riskier, really? I mean, you put down, I don't know, $50, $100, $200,000 on a house, you take out a 30-year long mortgage. So you have a debt burden over your head for 30 years, and it's not going to pay you back for decades, if not the entirety of the loan. Then you compare that to a small business, which you could make your money back within 1, 2, 3, 5 years and start cash flowing pretty decently day one. I think I just started to look. The narrative is exactly what you said, that small businesses are risky and it's risky to buy them and only the big guys do, and businesses fail all the time. And then I started looking at the numbers and I'm like, wow, the SBA loan numbers on default is actually incredibly low, meaning most of these businesses don't become bankrupt. And in tandem with that, the return on my capital, or the cash on cash return, how quickly I get my money back from the money I put down, is, 10x as fast as real estate. So what's riskier, and how are we defining that?
Yeah, absolutely. It's so funny to hear you say all that. I mean, it's a great argument. We're talking about tremendous ROI, things that can outpace what we've all been told our whole lives are safe investments. It just takes reshaping your thinking. One element of what you were just talking about was, it sounded like you were in a state of almost flux of like, what do I do? Where do I go next? How do I replace my income? Like, if I'm making good income now, I've got to find a couple things to replace this. How in the world do I do that? And I think a lot of people are in the same boat, because they hear, oh, go have more income streams. And I think a lot of people go, yeah, but the same questions you were having, what do I do that actually is going to pay me back in time? And what do I actually have the time to invest in when I'm a super busy person? I've got a family, I'm a student. So I was wondering if you could help me set a foundation for everybody in that step when they're at step one. So For the listeners, they're looking to build an income stream. What is step one to start achieving financial freedom, diversifying their income, let's say through business ownership, and how do they progress from there?
I think there are plenty of gurus that can tell you how to start getting financial freedom. You can listen to like Susie Orman or Dave Ramsey to talk about decreasing debt and 6-month, keeping 6-month reserves on hand and sort of like the foundations of creating wealth. So I would go to them. I'm not going to speak about stuff that other people already do. What I would say is once you have a little bit of money to play with, or you have a desire to figure out how to buy a business and we're not just dealing with your debt, like go to them if that's your instance. They're great. They've been doing it for decades. If now you are interested in buying a business and you think that the opportunity is intriguing and you want to learn more about it, then that's where I can be helpful. We have something called Unconventional Acquisitions, which is basically where we talk about how to do M&A, mergers and acquisitions, and how to buy businesses. And we have a 10-step process that basically takes you from this podcast is step one, which is, oh gosh, there's this opportunity of, let's call it 10 to 20 million businesses for sale in the US right now. Only 1 out of 11 of them will sell inside of the year. And most of these businesses, you can get somewhere between 50 to 100 to $200 to $300,000 in profit to put in your pocket. So if we're like, okay, that opportunity exists, that's step one. That's called deal clarity, or that's called understanding the opportunity. So like, that buying a business is an opportunity and it's available to normal people like you and me. Then we have step two, which is deal clarity. Then you've got to ask yourself, what do I need? If you're like me, you're like, I need to replace $100,000, let's say. I need to replace $100,000 in income, and then I want to quit my job. Okay, that's your deal clarity. Or it might be, I need an extra $100,000 in income, but I want it to be passive. And that's your deal clarity. And so we go through a bunch of questions like location, type of business, how much money down, whatever, for you to figure out what is it you need the small business to do for you. You don't need a car wash. You need the money that comes from the car wash. You don't need an Amazon FBA business. You need the cash flow that comes from the Amazon FBA business. That's deal clarity, step two. Then we get into step three, which starts to talk about how do we find these deals. It's called origination, right? In private equity. So where do you go out and find the deals? How do you figure out the deals? Then we go to step four, which starts to talk about selling yourself. So how do you talk to sellers? How do you position yourself as a buyer to be taken seriously? Then we go to step five, which starts to talk about valuation. So how do you know how much a business is worth? How do you know what price you should pay for a business? What are the metrics that make sense? Then we get to due diligence, which starts to talk about how do you make sure what you see in front of you is truth and not lies. Then we get to the next step, which starts to talk about structuring. How do you structure the deal? And you guys talk about this a lot too, but you can structure a deal 6 ways from sideways. That's a beautiful part about small business. It's the opposite of buying a house where there's basically a couple levers that you can pull and nothing else. Small business, there's a million ways. So structuring is magic. Then we get to financing. How do you get the money for the deal? And you can do it with none of your own money. You can do it with only your own money. You can do it with only other people's money, the government's money. There's so many ways to finance deals. Then we get to closing the deal. What does that look like? The types of paperwork, legal, making sure everything's ticked and tied. And then finally, we get to your first 90 days, which is basically, so you have a business, now what? And so this deal frame is what I like to take people through to get to financial freedom. And the last thing I'll say, it's just one how. At Contrarian Thinking, which is our free newsletter where we talk about thinking critically and cash flowing unconventionally, we have a million ways that you can think about getting financial freedom. Buying a business is one of my favorite ways, but it's not the only way. So there's lots of other hows.
I love that. Yeah, it's really interesting, especially some of those early steps that you were just talking about. And I think, people forget, they're getting tied up with, I'm looking at a bunch of businesses and, do I want that laundromat? Do I want that car wash? And the way that you just said, no, put it in perspective. Like, what do you need from that? I need that cash flow, or I need it to replace my, income. I think it's such a good way of thinking because, I think we talk about it often on this podcast. People are funny about getting in their own way sometimes and not really seeing the forest through the trees, especially when it comes to money, businesses, investing, creating big changes in their lives. So I like that framework and that you could, walk us through what do you do when you are that person in step one and to go through that. You said earlier, you were talking about asset classes. I was excited to get into this. I know we'll get into it in a couple different ways in this episode, but it seems like you are an advocate for being in different asset classes. But I wanted to clarify, is it better to diversify within a specific asset class? So let's say investing in different online business models, for example, or do you think it's better to have a finger in every pie across different asset classes? So that might be, online here and a laundromat there, for example.
Yeah, I am an advocate of being sector agnostic, which basically means that you look for the best opportunities and deals on a valuation standpoint, on a structure standpoint, on an unfair advantage to you standpoint, as opposed to staying in one particular sector. Now, that's also because I just prefer it. I like doing multiple different things and having multiple types of businesses. And I like operators running different types of businesses for me. I consider it a different type of diversification. Just like in the stock market, you would have small cap, large cap, healthcare, tech, emerging markets, right? So if you look at the largest private equity funds out there, there's very few that are niche specific, meaning that they only do one sector allocation. Go look at KKR's portfolio. Go look at Sun Capital's portfolio. What you'll find is completely separate businesses in their portfolio that then they do roll-ups inside of that business, meaning they might own an airplane manufacturing company that produces some sort of hardware for an airplane. And that might mean that they go buy all the other airplane manufacturers inside of that company, but they also own a massive pool cleaning company. And they also own a massive landscaping company, or they also own a massive, internet marketing company. So I like having diversification, and that's a personal preference, but there's plenty of money to be made in doing one thing and doing it really, really well. I just don't think it has to be that way.
Yeah, the roll-up point, that's an interesting one because we've talked about roll-ups a lot this year, and it's kind of come to light, especially as we've had just the rise of aggregators, especially in the FBA space, coming through, buying up businesses. And we've talked about sort of the technicalities of roll-ups as you see it unfold, and mainly we see it in private equity, right? But we also talk about that there are fundamental principles that an everyday buyer, an everyday person just starting out or maybe a little bit further in their buying journey and they've got a couple different businesses, they could apply the same principles to their own buying strategy. Is that something that you work with and encourage people to do, is to figure out how to emulate, say, roll-up strategies like the biggest players into more of like an everyday investor?
I don't know about to an everyday investor. I mean, we have a mastermind group where we buy businesses together. And in that group, there are a lot of people that we say, well, once you've understand the structuring and sort of some of the anomalies that are specific to each industry and the pricing, let's say, then, you can keep rolling up companies pretty easily in that space. So we do have a lot of people that roll up laundromats and that roll up car washes and that roll up. I'm doing a big dental lab company roll up right now. That's like where you go to get your molds done or your brace molding or any of that kind of stuff. So I do like that space, but I think the most important part to me is that you understand what your investment thesis is. And so I take people sort of through my process for figuring out if an investment fits for me or not. And it's not about what the company is, except that I have a little bit of the KISS method, like keep it stupid simple. If you're talking to me about a biotech company or some like crazy proprietary technology, I'm probably out because I don't have the knowledge set to be valuable there. But as long as the business is a simplified business and relatively easy to understand where I could explain it to my grandmother, then I focus more on what is the return that I'm going to get from the investment. And again, I think about it like a bond. Like with a bond, you would look at a couple different things. You'd look at the coupon, right? So that's the interest rate that it's going to pay you. And you'd look at the price. More expensive than you think it should be? Is it the right expensive that you think you should be? You look at the term. How long is the bond out there for? Am I going to get my money back in 1, 3, 10 years? And then you'd also look at the risk of the bond. Like, do I like whoever I'm loaning money to? Do I like the institution? Does it make sense to me? And that's kind of the same thing that I do with small businesses. I'm like, does it make me at least $100K a year in my pocket? Will I get my money back within the original money that I put down within 1 to 3 years? Does it start to cash flow day one or at least within the first quarter? Can I get to a place where I'm comfortable with the risk of the business overall? And do I like the people that I'm working with and the team that will be running it? And so that to me is the most important part.
Excellent. Yeah, I really like how you laid that out. As you were talking about that and, getting rooted in your investment thesis, and I mean, tying back to some of your earlier points, you're talking about building this varied sources of income, especially when you're going from point one or point zero to, one source of income to a varied set. But when you've encouraged people, to build their ocean of income, I couldn't help but wonder, is it possible for someone to have too many income streams? Like, what is the tipping point for that?
Yeah, I'm sure it is, but I don't think it's about the number of income streams. It's about oversight and time allotment. So we wrote a piece on Contrarian Thinking, if you guys want to see it, about decentralized leadership. And so it basically explains, how do I have 25 businesses that pay me currently today? And how do I oversee them? How do I not get cheated from it? How do they not blow up? And I'm no smarter than the next guy. So I basically just looked at who are a bunch of people that already have more businesses and more income streams than me, and who better to look at than Warren Buffett and Charlie Munger. So they have something called Decentralized Leadership, where in essence, they have a headquarters team of about 25 people that manage and oversee 250,000, 300,000-ish employees at their varying portfolio companies. And the way that they do that is through a very particular model. And the model is having really smart scoreboards and KPIs, key performance indicators, that allow you to oversee the business on a weekly, monthly, and quarterly basis, with oversight into the financials in particular. So you can make sure that you have historical looking and forward looking projections and actuals. And then they hire the best operational team that they possibly can to run them and get out of their way. So they can tell if the operational team isn't working well by the scorecard, the KPIs, the projections, and the actuals. But as long as those things look good, they let the operators run. If you can structure a business that way and eventually, get to a point like Warren Buffett, the guy reads all day and kind of thinks big picture, and other people run the business, and then other people oversee the people running the business. And so, I think you should try to keep your direct reports to about 5 to 8 people max. Anytime you get over like 8 to 10, or more than that, I think it starts to get tough, but you start creating layers in a company to oversee your assets or your investment streams.
No, that's fantastic advice. It makes me think of when you're talking about the ways that people might be misaligned and how they can bring back a better investment strategy for themselves. Do you find that there are just really common mistakes that people make when, it's beyond just investing, it's this journey towards financial freedom? In what ways are people really tripping themselves up?
Totally. I think you nailed it. We probably have to have a segment on at Contrarian Thinking and also at Empire Flippers is get out of your own way. You said it perfectly. I think the number one reason people don't achieve financial freedom is they do not spend the time thinking about it, and they do not spend the time learning about it, and then they do not spend the time taking action on it. I think that's that old Tony Robbinism, which is where your attention goes, your energy flows. And so you have to give attention to your money and investments. You have to know where they are. You have to know why they are invested in those things. You have to have a strategy for them, and you have to have a system in place to make sure that strategy is getting executed. And if you can do those things, then there's no reason why anybody in the world can't get to financial freedom. It's just that most people don't take the steps to first know where they are. That's like a net worth allocation overview. That's understanding all of your income streams. That's seeing what your debt burden is. It's basically just like looking at a business. If I look at the business of Sarah today, I should know what your P&L is. I should know how much money you make. I should know how much money you spend. I should know your debt. I should know your assets. I should get a full picture. We should each have that. And then once we have that, we need to learn the language of finance and money. And if we learn the language of finance and money, then we can start to allocate properly, ask the right questions, and have our money go out and bring back more friends.
Yeah, it's so funny you bring up the P&L aspect, because it's something that we're always preaching on, for sellers. It's okay, if you're reaching the point where you're coming to us and you're coming to exit, please work through some of those elements that when we build your P&L, it's all in order. And it's funny how so many people can go through running their business for so long without really ever having those things clean. They're making it work, yet they're living in their own chaos at all times. And I think it's a constant state of not really looking at themselves and getting in their own way. And miraculously, they somehow run a business in the midst of it, where it's you were saying, if you just got back to really cleaning things up and knowing your fundamentals from day one and running your business on top of that, you'd probably have something better to exit at the end of the day.
Only one thing I'd add, which is like, it's okay if you're not there. Believe me, I wasn't there and I was in finance for decades. It literally took me being so burned out and so tired of getting on planes. I used to run the Latin American investment business for a large asset management firm that I built, and it was a multi-billion-dollar asset management business. And I was so tired that I was like, I have to figure something out. And only then did I start looking at how much money do I have? What could I put to work? What am I even worth? I didn't know any of that stuff. I was just focused on working. And so that's totally okay to be there, but it's not okay to stay there. You know, it's okay to be there. It's not okay to stay there. And so now that you've heard this podcast, you got to go out and in a couple hours over this weekend, you can set up a Mint account. You can pull together all of your assets. You can look at what your spending patterns are. And if you have knowledge, then you can build on it.
Yeah, I'm really glad you brought that up. You know, one of the things I've been reading this year, I think it was Brene Brown, and she talks about the concept of shame. And I think what you said is so important, because what you're hinting on is like, there's a lot of people who feel guilt or shame about not knowing. And therefore they get stuck in that one place. It's like, I feel so bad that I don't know, and therefore I won't take action on it. But like you said, it's like, you've got to take that step. You're worth taking that step. It's only a couple hours this weekend. You'll feel better. That shame and guilt will go away. And all of a sudden you're going to have a game plan in place. And I think that's powerful, just to make that known and go, it's okay, guys. If you're not there, it's going to change. It can change, and it's all right. We're talking so much about, investment advice, and I love to kind of let people get on their soapbox and maybe address things in the industry, whatever their respective industry is, that they don't quite like. So I was wondering what investment advice feels out of date, especially in light of rapid changes happening in society and within technology. I'd imagine this might be a fun question for you, because I think there's probably a lot you feel is like just not working or out of date or not fitting. So go for it.
You ask great questions. Yeah, a lot. So first is, I'm working on a piece. It'll probably be out in the next couple of weeks here, but it's like the 2.0 version of Robert Kiyosaki's The Cash Flow Quadrant. So if you guys aren't familiar, that's basically like a little box of 4 squares that says, you start as an employee, and then maybe you're self-employed, and then maybe you're a business owner, and then you're an investor. And the goal is basically the investors are the richest and have the best tax breaks, and the employee and the self-employed are sort of the least advantaged. And so I think that that is totally wrong. I think those categorizations are the IRS categorizations. That's it. All they are is how the IRS decides what to tax you on. Okay, that's fine. That's one aspect of it. But what you really need to care about is your understanding of finances and your ability to execute on investing. And so we're working on sort of what I'm going to call the Contrarian Investor Matrix, which is much more about how do you spend, how do you invest, and how do you make your money work for you, as opposed to what are you employed as, which I just don't think is the right question to ask. The other thing that drives me a little crazy is like Dave Ramsey's debt is a bad thing. I get why he's saying that, because most Americans have bad debt. And so he's right to talk to that segment and say, hey, revolving lines of credit at 9 to 13% APR interest rate is not good. And so we need to get rid of those, and we need to stop buying a bunch of stuff we don't need to impress people we don't care about. So that makes sense to me. However, massive wealth, which is what I'm interested in. I'm interested in actual financial freedom to the point where you can have your own FU fund and no one can have control over you. That is what I'm interested in. I'm not interested in not being in debt. That's too small of a goal. And I think most people can get to financial freedom within their lifetime if they do it the right way. And the way that you do that is by having good debt. That's how you buy large assets that can cash flow to you. So I don't like that people categorize debt poorly or to get out of debt. It is no, get out of bad debt, and yes, apply good debt. That's just called leverage.
Yeah, you have such funny timing. Just yesterday, I had someone on the podcast from basically a funding company talking about that. And we were talking about the stigma behind debt and how, like you said, too many Americans only know debt as an evil source, or they got into the debt that wasn't working for them, it was working against them because they didn't understand what they were getting into. And then you're plagued by this notion that debt is never my friend. It can never actually be something that I can use as leverage or use to build a business and still have cash coming in, for example. I think that's a really powerful point. And I love that. I think it leads me to my next question because we're talking about, okay, what are the ideas that aren't working? I mean, I know that you are invested in so many different things. You are really on top of the trends. And so I'm curious if we're going from maybe what people shouldn't be doing, what do you think people should be investing in? What are the trends that are driving the industry that people should really be paying attention to?
I think one of the biggest trends overall is that people are waking up to this and that the time is sort of now. I mean, look at what Jerome Powell said the other day, right? Inflation is not transitory and we should retire that word. Yeah, we've known that for months, man. And so if inflation is actually heightened, as we all think that it is, and now the Fed seems to be agreeing with us, and it is not due only to supply chain issues, then that means that there is no more important time than right now to start assetting up and ensuring that you have assets, things like real estate, businesses, et cetera, that are appreciating in value due to inflation, and simultaneously assets that cash flow, that pay you while you wait for that asset appreciation. And so people are all thoughtful that there's inflation now, but I'm not sure that they're actually taking the action to combat it. The other thing that I think is a trend people need to contemplate right now is there is a massive amount of day trading and hype happening, which always happens at the top of market cycles. It is not different this time. This is just another cycle. It doesn't mean that NFTs won't be something important in the future or that crypto won't be something in the future. I'm sure they actually will. But the speculative hype-based investments, they will vanish. And people will have wealth eviscerated from trying to play the greatest fools theory, which is basically that the next guy is going to pay more than you. If you do not have an inherent belief, meaning a deeply held belief, that the asset that you're buying or the thing that you're investing in is something that you want to hold for 10, 15, 20 years because it's going to continue to cash flow to you, and you are great if the price goes down because you just want to keep buying more of it and holding it and cash flowing. If you don't believe that, I don't think you should make that investment today.
Wow. I mean, that's incredible advice. I mean, so interesting to hear your perspective and all that, especially when you're talking about speculation and just making sure that you're protecting yourself and you're not investing in things that are, could potentially blow up in your face in the future. It's such an interesting time in the midst of all of the kind of world changes we're going through, what's happening with currencies, governments changing. It's like, okay, make sure that you're making the right moves now. Don't just sit and wait. You don't have the time to wait. So I've loved that. I did want to ask, maybe just shifting gears a little bit, I had a couple personal questions for you because you've done so many cool things in your past. I'd love to dig into it a bit if that's all right. So, you've had this very storied career. I know that you've been around the world of finance for a long time. You were a journalist in the past. And I guess, getting to know you and your story a little bit, it sounds like making sure that everybody got a chance at financial freedom is important to you. I mean, I like that, throughout your story and what you've built for yourself over time, it was the identifying, okay, it is through, capitalism, like you said, there's a lot of power in that. How does that shapeshift to be something that, you go to a country and see how you enable them through the lens of capitalism? And that was something that came to my mind as I was thinking about your background. As you went from like journalism to the world of finance. Like some people really demonize finance and they go, well, if you're a journalist, you in a way are kind of working in a humanitarian sense, but like you're going over to the bad guys. And I don't know, and not to put words in your mouth, but it's like you said, no, that's not actually the case. And if it's, if you're doing it through a different lens, there's actually a lot of power and a lot of like good that you can do for people through this world.
Yeah, I think you're absolutely. Well, these days, I think maybe both of the bad guys, right? Everybody hates journalists and financiers. So I'm a double check box. Everybody can be pissed at me. So what I didn't like about journalism, and at least at the time, is back then you weren't supposed to have an opinion. And so it was like, here's the facts, and I'm going to state them. That's how I was taught in journalism at the Cronkite School. And so I just felt like raising awareness wasn't enough. So I would write these stories about really depraved things that would happen to people across the border, because I was working in Latin America at the time in Mexico, and nothing would really happen. And so I started to think about, okay, well, what actually makes change? And what makes change is money. So basically the great equalizer is green. It's not racial. It's not genetic. It's not sexual orientation. It's all about who has the capital. So if we could get more people to have capital and less people to be impoverished, then we could equal the playing field. And so I went from this journalistic idea of I want to dig into things and understand them and then explain them to other people in more simplified terms, which is what I hope I've done now in finance and try to do with Contrarian Thinking. And then added on top of it the ability to actually make change by having money to allocate. Because if you think about it, money is just a tool, right? Anybody who has gotten over the negative narrative of money knows that. It's just, do I want this other person to have a hammer or do I want to have the hammer? And if I have the hammer and the nails and the wood and all of the resources or all of the money, then I can build the world that I want to exist and build. And if I don't have those things, then I have to live in somebody else's house. And so that's sort of how I think about it and why I think understanding finance, you don't have to be in the industry, but understanding it and being able to label yourself as a knowledgeable investor is probably one of the best impact things you can do too, because you are enabling other people to live in all the things that you built. And because that's what money does.
Yeah, I think that's a powerful point. And I love hearing your story going from, kind of one realm and the other, but seeing how they kind of ultimately connect at the end of the day. I'm curious, you've been through these different kind of career positions and grown into the world of finance. If you could go back and do anything over, is there anything that you would change?
Probably a lot. I mean, we wrote this one piece that was kind of fun, which was like, how I lost $11 million, which, there's a part of that that's like funny to even think about. I didn't grow up with much and my dad's an immigrant and like ever having even a couple $100,000 seemed like completely unfeasible to me when I was younger. And so it was weird to write that article and then also sobering. But there's been plenty of stuff. I mean, with investing, you're never going to win 100% of the swings you take. You're never going to hit 100% of the swings you take. So if I looked at it from an investment standpoint, there's a lot of deals I wouldn't do. Maybe more important is just what did I learn from those? And I guess I needed to learn that lesson at that time. And, some of those lessons are things like you get what you pay for sometimes. So just because something's expensive doesn't mean that it's overpriced. And I learned that the hard way by going after some value deals that were definitely cheap. They're cheap because they should have been even cheaper, and missing out on some deals that were expensive, but they weren't overpriced. And so I definitely learned that. And then I think the only real regret I have is not learning about personal finance and investing my own money and taking action on it earlier. That I spent too long just making it for other people and not understanding things about investing, about price and terms, and about putting my money to work. And I wish I would have paid attention to that earlier, because I would have hit financial freedom so much quicker than that. But besides that, I mean, I was divorced, but I don't regret that. I've changed lots of jobs. I don't regret that. I've had lots of bad partnerships. I don't regret that. I think it's all been a learning lesson. But the real lesson is start learning now. Like, when's the best time to plant a tree? 10 years ago. Second best time now. So, you're not going to end where you start, but you need to start to move forward with whatever you're going to end.
Oh, that's awesome. I mean, it's beautiful. I mean, as you said, it's like there's ups and downs, but that's a journey. That's a story. Like, that's what life is. And I think it's incredible what you've been able to achieve and where you are today, able to help so many people.
Thank you.
Yeah, thank you. Well, I like to wrap these up with just a couple rapid fire questions, if you're cool with this.
Totally.
Awesome. So first rapid fire question, what is the key to achieving financial freedom and personal freedom?
I think it goes learn, earn, invest.
Awesome. And what tools or resources can help people to achieve financial freedom?
Well, it's a little bit of a softball because we created some that I think are perfect for this. But if you want to go to contrarianthinking.co, it's a free newsletter. It comes out every single week. And we talk about thinking critically, so how to change your frameworks, and cash flowing unconventionally, ways to make money that starts cash flowing day one. So that's one. And then if you like that and you start to get serious about it, we have a premium group called Cash Flow that has 12 different income streams each year that we do a deep dive into, so you can pick a few and execute on them. And then if you're really serious about business buy-in and are going to allocate $100K to buying a business in a year, then we have a business buy-in mastermind. But that one's more expensive, so I save it for people who are very interested in buying a business, that one's not for looky-loos. So first learn, go do Contrarian Thinking for free, join the cash flow group. And once you have more money to allocate, then consider something like the mastermind.
Awesome. Final question. Sometimes it's the hardest one. What would you say has been your funniest moment working within the world of finance?
I remember like when I first started in finance, I must have for a year, and I don't remember if it was when I was at Goldman or Vanguard, but I was walking around calling it a 401k instead of a 401k. And I think somebody just told me the name incorrectly. And I can't tell you how many times I didn't know a term, or, I wasn't prepared for what it meant. And I misuse stuff in finance because like this own language, right?
Yes.
Margins, warrants, options, ratchets, milestones, earnout, all these things are there sort of, I think, so that we in finance can charge you 2 and 20, which is our fees, and they seem too complex for you. But yeah, some of my funniest moments were just, it's okay that you don't understand. And I think, in fact, some of like the 3 most powerful words from an investor, if you're going to do a deal, are, I don't understand. And when you say those, then it allows you to dive deeper into them without getting your ego in the way about feeling like you have to be smart and know it all. You don't need to know it all. You need to ask, though.
Yep. I mean, it's an incredible example. I think it goes back to people getting in their own ways. You don't want to seem like you don't know, but when you do ask and when money is on the line, it's pretty worthwhile to go ahead and ask those questions. Well, this is awesome. Codie, you've been great, and I've loved hearing more about your story, and you've given us so much actionable advice today. So thank you so much for coming on to the show.
My pleasure. This was so easy. Thanks for having me on. You're great at asking questions, and I hope this was useful for people.
Awesome. Thank you so much. I appreciate your kind words. Hey everyone, thanks for tuning in. I hope you've walked away with a bit of new insight that'll help you in your digital entrepreneurship journey. If you enjoyed this episode and you'd like to help support the podcast, please share it with others, post about it on social media, or leave a rating and review. To learn more about businesses available for sale at Empire Flippers, click the link in the description or visit empireflippers.com/marketplace. Thanks again, and I'll see you next time.